Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so yesterday we talked about how the 2603s remained open for a full test. They got the full test, they got the break, they traded it down to 2583. They brought it back from there, they rejected it back, and what you've got is the latest in a long line of bear market rallies. Because as long as we're trading below the green line there, the daily midband, and as long as we're going to spend a heck of a lot more time below the 200-day than we are above, we're in a sell rallies environment, we're in a bear market environment, and you get violent rallies. It's okay to be long the rally. It's okay to be out of the rally. What it's not okay to do is be early short the rally, because you will get destroyed. So we had a fantastic morning yesterday, just basically, selling the open and selling the little pops. Short 38.5, short 24, short 26, 26, 24, 26, 11. The afternoon got choppy. We made a little bit. We got stopped out a lot, and I'm flat. So look, like I said, you can be long these pops. You can stand aside on these pops. Right now, I'm standing aside. So yesterday ended up being about a 50 handle day. So the week is done. It's in fantastic shape. And if I end up missing a pop here and there, the thing that a lot of newer traders or feel like they have to be in every single inch of the market, you really don't. You really, really don't. I would rather, if I'm in a pop, and I've been in a good number of these, that's fine. But if the room can't get into a pop, it's better to stand aside, to wait for resistance, wait for the regular session, and then see what it wants to give you. That's, because it's handing out more than enough handles during the regular session. You don't need to be playing around in the Asia session. You don't need to be playing around in Europe, because it's super thin and they're moving it in dozens and dozens of handles. And if you're not going to sit there and watch it all the time, you're going to get burned. You're going to get burned, and it's not worth it. So, one thing that we never adjust is our disaster stop on any particular trade. So we had a 50 handle day yesterday. That included one -5 disaster stop, because that's what volatility does. They popped it on some news thing and they ripped it, and that's what it's there for. The nice part is, in a volatility market, that -5 disaster stop on a relative basis becomes something dramatically less, because when 4 handle trades are moving 14 handles, etc., that -5, it starts to, turns into like a 10-15 cent stop on oil. The point I'm trying to make is, you need to stick to your regular risk rules, whatever those are. And stop outs are going to happen. And what you do is, you assess the setup, you get back on the horse, and you do the next thing. I mean, that's really all that you can do. But you can't be surprised if you take a couple of disaster stops in a hyper volatility environment like this. It's that the tape is moving. It is a fast market. So on the hourly chart, daily pivot, hourly mid, or support. I think we're headed for the weekly pivot here. I'd be pretty surprised if we didn't get there to take a look. And what I would say to the bulls is, when you get there, you better convert it. You better convert it and never look back. Because if you don't, we're going all the way back. Because every other time, we've gone all the way back. Can't get it done, can't get it done, all the way back, all the way back. It's just, you got to convert the weekly pivot. Weekly pivot determines tape control over a particular week. It has for the last 2-3 years. It is what it is. The bulls spent years establishing weekly pivot as support early in the week, and then having directional days on Wednesdays, Thursdays, and Fridays to the upside. The bears lately have spent the early part of the week establishing weekly pivot as resistance, and then ending up with directional moves late in the week. So if we get here, who wins this battle over 2690 is going to be very significant. So you got to keep an eye on that. At a minimum, the bears want to keep holding the hourly mid-band, or the bulls want to keep holding the hourly mid-band. The either side would want to win 2665 to 2667.68 for today. We'll see how it opens up. I'm going to let it open, and then we'll deal with the next 5-10 handles in front of us and go from there. All right, everybody have a fantastic day. We'll be out with a bunch of stuff on social. Check that out. Until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.